Infosys has came out with its quarterly results and it's largely in line with the estimates. Only net profit has fallen 10% on the back of new labor codes, but management is sounding confident with a guidance hike and also strong deal momentum there. Now, to decode what this really means for IT stocks and the broader market, especially at a time when global geopolitics is also adding to the uncertainty here, we are joined by market expert Gaurang Shah, who is Senior Vice President, Geojit Financial Services. Gaurang, good morning, and thanks for speaking to us on a market holiday.
Thank you so much for having me. Good morning to all of you.
Yes. So, Gaurang, Infosys net profit has fallen, nearly 10% on the back of this new labor codes. But overall, the numbers are largely in line with the estimate. So, do these earnings actually change your constructive view on the large cap IT, or is it, the market still likely to stay cautious here?
Thank you. Well, so I'll just give a small disclosure before we go further because we have positive coverage on Infosys on the fundamental side. So the recommendations are a part of our fundamental research team from a long-term point of view. Our company, Geojit, or myself, we don't have any kind of investment in the recommendations that will be given by. No financial interest, no conflict of interest, but we give we give advice to our clients on similar lines. They might have their investment interest. So I think this one-time hit on labor code has been there in TCS, in HCL Tech, and in Infosys, and I'm presuming that it will definitely reflect in other IT companies also, large cap, mid cap, small cap. What we understand is that large part of this labor code impact, normally most of the companies try to factor in one particular quarter so that there is no chain effect or there is no domino effect as we go into the fourth quarter and the next financial year. In terms of downtake, well, not really surprising. Third quarter, historically, if you actually go to see, is a little bit subdued for the IT sector. Keeping in mind the verbatim given not only by the management of Infosys, but also by HCL Tech and TCS with respect to AI and data centers, I think this should open up quite a lot of opportunities as we go into the future. And as we all know that India is at a very nascent stage of this AI growth. And I think it's a very calculated measure that the companies are taking in terms of their future endeavor into AI and related platforms. As a disclosure, again, we have a fundamental coverage from a long-term point of view on Infosys. We're also recommending clients to have a stretched out time horizon given the kind of headwinds and uncertainty that lies ahead of us in the short to medium term. But definitely, we feel that you cannot ignore IT sector in case if you're a long-term investor.
Absolutely. So one cannot ignore the IT sector, and but the deal wins here improving and also the AI demand showing its momentum. So is this the start of a sustainable recovery for the IT earnings, or are margins and also pricing still the bigger overhang here?
So firstly, let's talk about AI. So there are a lot of companies post second quarter numbers who have been positive with this particular venture. They have done acquisitions to increase their presence, and going forward, if there is going to be surplus cash on the balance sheet, I think you will see many more such acquisitions coming in terms of AI and a kind of growth that the Indian IT companies will deliver. With respect to deal wins, I think the number was decent. There is a scope of improvement over there. There is absolutely no denying. But the street was a little bit concerned not only in the third quarter but also in the second quarter for the AI sector in terms of earnings. And whatever they have done in the second quarter and whatever we've seen up till now in the third quarter, I don't think there is a huge negative or a big overhang in terms of growth visibility. It will depend in future the kind of product services and launches that IT companies will do, and a lot will depend upon what kind of acquisitions they do.
Absolutely. And, in fact, the global markets are also jittery on the geopolitics here, Gaurang. So US elections, Middle East tensions, and also the currency volatility that we are seeing here. So how vulnerable are Indian equities and export-heavy sectors like the IT to these external shocks?
To be very honest, I think with respect to geopolitical situation, I don't think anybody can guess as to what is going to unfold in the next, immediate future. We'll only have to react to it once we have the event unfolding and how much serious impact that particular event has. So it's very difficult to predict that. But having said that, I think India, as far as the domestic data points are concerned, there is absolutely no negative over there. Whatever we are witnessing, point number one is on the geopolitical front, news flows from the global arena and the sell side number from the foreign institutional investors. So I think if there is some kind of positivity in terms of geopolitical situation easing out, or there is some kind of peace reached, whether it is Russia, Ukraine, or whether it is now in the Middle East and the US, President Trump making statements with respect to Iran. We saw what happened to Venezuela. We know what kind of statements are coming for Cuba. So I think this is an evolving situation. Very difficult to preempt any kind of situation that will happen. And like I said, we'll only have to react to it as and when it happens. One particular issue that I am a little bit concerned in the immediate short to medium term is the crude oil prices. Well, if that has to shoot up, then that can create a problem for an emerging market like India.
Yes, so crude oil prices could be, problematic if they rise, and that's a serious concern here. Now on to a question, that investors and the viewers who are watching us right now, so they must be, very interested, after especially the earnings have come out of TCS, Infosys, HCL Tech, and for them who want to take fresh positions in this, in these counters at this particular juncture, what's your view for them?
Well, my only advice is that if you eventually understand, decide, and do a little bit of homework, and if you come to a point of a decision where you want to take a look at investing into Indian IT sector, please first of all have 1.5 year plus kind of time horizon, because we are going through a little bit difficult backdrop, and to evolve from this backdrop, it is going to take some time. Start at current levels and add on dips would be the best strategy, because markets, not only Indian markets but the global markets, are a little bit in an uncertain time. And look at growth oriented companies. Don't just hear say anything and start investing. Do your homework and then possibly decide whether you understood it, and if you understood it, then only take a leap and go and invest. Don't put all your money at one time. Stagger your investments. Focus at large cap and mid cap first, and then selective mid cap IT companies, or small
Yes.
cap IT companies.
Thank you so much for that. So viewers, those who all, of you who are watching us right now, so it's Gaurang Shah's advice that please do your homework, but it's anyway, that needs to be like a proper hygiene that, investors must follow. So Gaurang Shah, always a pleasure getting your perspective.
Thank you.
Thank you so much for joining us on NDTV Profit.